But everybody who's tuning in now that isn't familiar with Dr. Woody Brock, Woody and I have been communicating with each other since the early 1990s. Woody's got a great background both in academic scholarship, but also in just trying to understand how the markets work, and more importantly, just the economies around the world, focusing on the US. So everybody can have a look at what's on the screen there. And yeah, if you have any questions, just write in as usual.
First of all, please be sure that I like to be disagreed with when I give an opinion. That's one thing I'm known for. I'm happy to be challenged. As I say, I'd much rather be right than wrong next time I hear something when I make mistakes, which is often the case. The difficulty this time is that I'm going to be talking about the dollar because it's, without question, the most confusing topic in international economics, which is far the most difficult part of economics. It's like a PhD at Princeton, where the best go, and 90% never understand general relativity theory. It's just too hard. And so what I'm doing is reviewing the change to what determines whether the dollar goes up or down. Then in the old days versus now. What's changed? How has the pricing of a currency changed? So that's one of the topics. But you can't answer that unless you explained how the dollar was and is priced. And back when we were an industrial economy, 1980, 1975, back then, the variable that you would like God to tell you to get currencies right would be to say what will happen to interest rates. When the German Bundesbank would raise rates 1%, the dollar would go up 1%, period. Interest differentials matter. When they changed, we knew how the currency would change. One of the reasons for that is that currencies had to change the relative value to control trade deficits. If we bought far too many cars from Germany than they did to us, and we had a big trade deficit, well, one way to cut the trade deficit way down is for the dollar to go down and be able to buy fewer cars. So we would now buy half as many German cars, and we would buy fewer of their cars. The result would be a change in supply and demand, such that the dollar would go down and solve the problem of the imbalanced trade deficit. That mattered, but not much, because the trade deficits 40 years ago didn't swing around, and we were in fact under surplus under Bill Clinton. But with him, we had surpluses. There was no big U.S. with a huge trade deficit. But that was the end of that period. And since 1985, a number of things have happened, of course, but one of them is that our trade deficit has repeatedly exploded and never shrunk to the highest level it's ever been. And now the whole world is worried about the trade deficit, which they never used to care about because it didn't move. Now, I want to try to keep this straight, but I'm just writing this, and this is tricky. When you have a trade deficit, you have to make clear what the law of supply and demand is for assets. If the U.S. has a big trade deficit, which we do, and the world is wondering how utterly irresponsible are we, well, the mathematics are, and I will not explain it, I have done before, and it's too complicated. But if you run a huge trade deficit, call it X trillion, you have to pay for it by selling, since you can't sell Chevrolets, nobody wants them, you have to sell assets. I'm the good call, sells cars and jewelry it makes, or else it sells T-bills, the Empire State Building, or whatever. It doesn't really matter. But when you have a trade deficit, then you cannot, by definition, sell enough goods. You sell assets. Hence, the U.S. has now sold more T-bills, more assets, more real estate, more farmland to the world, to an extent that exactly is for and equals the trade deficit of the U.S. with the world. This is one of these freak mathematical things. But basically, what this means is, well, the better to say what basically it means is that when the U.S. has a huge trade deficit, which is what I'm saying, it can't sell enough Chevys to buy the cars that it wants. Since it can't pay its creditors the $1 trillion trade deficit by selling them goods, it has to sell them the T-bills and what we call assets. But when foreigners want our assets, which they have to get to pay them for the trade deficit, which we have to pay for, we can't just steal the extra cars. But, when this happens, lots of other things happen. But in particular, when you have to sell a lot of assets, what do you think foreigners must buy before they buy assets? And the answer is they have to buy the dollars with which to buy the T-bills, the farmland, or whatever. Does everybody get that? The demand for dollars with which to buy the assets that they have to be paid to pay their bill is large. Repeat, large demand for the dollars with which to buy the trillions every year that our trade deficits cost us, although that's a mismeasured term because we have a big trade deficit. That is not true when you don't have a trade deficit. It's the way a company like Germany, the problem is it doesn't want to buy dollars for dollar assets. It wants basically to sell more. So I want to keep it from getting too confused. The thing that has happened is when people say, Woody, why has the dollar been so high for 20 years? When we are the disgrace with a huge full trade deficit. Because 50 years ago, if you had a big trade deficit, it was a sign you were in trouble and your currency was low. Big trade deficit, low value of the dollar. That was standard. A big trade deficit meant you were weak and the dollar was not strong. Today, the world is looking at the whole world and wondering where to put their money because they have so much of it for reasons I'll talk about. They have so much money that they can't even know how much dollars they have. Why does the world with a huge U.S. trade deficit, meaning that the U.S. must pay them all, not steal the extra cars, pay them, as I indicated, by giving them T-bills or farmland or whatever assets they want. They have to do this. And foreigners have a huge amount more money which they wish to invest in America, which means they have to buy dollars before they buy dollar assets, correct? And so the demand for dollar assets is huge, and the result has been that despite far the worst trade deficit in the world, the dollar has been very, very strong, despite that being the reverse 50 years ago. The rule is reversed. We have a terrible trade deficit, yet our currency is strong because so many people want to buy our currency. Now, why do people want to buy the currency? I'm making it sound as if there's a lot more demand for dollars than there otherwise was. And of course, there should be, but for two reasons. There's a huge value or appreciation in dollars, which is why the demand for dollars is so high and the value is so high. It hasn't been true there before. And the demand for dollars, is huge because it has to be huge to finance the huge trade deficit that we read about right now with people wondering if the U.S. is going to hell. But I've covered that point. When you run a big trade deficit, and ours is the biggest in the world, you have to pay the people for those cars, and you have to basically sell them dollars. And in order to buy dollar assets, which is how they're paid, they must buy dollars first with which to buy a T-bill or a farm. So I just point this out. But the big story is what comes next. Once again, Woody, why does it seem as if, other than there being a big trade deficit, that the world likes the dollar? You didn't like the dollar even with the trade deficit, e.g. 50 years ago. The dollar doesn't have to go high. But the dollar has been consistently high. Why? Well, by definition, it has to be because the rest of the world wants dollars or has dollars much more than it used. So where do the dollars the world holds from come from? When you get extra dollars, if you have a trade surplus with us, as they do, you get more dollars if people like us better. They simply prefer our bonds to someone else's. And it goes on. There are a lot of reasons why our mismanagement in running a trade deficit looks poor. There are now things that overwhelm that. Here are some of the most important things. Only Larry Summers wrote about this, and I wrote about it with him and published it 5 years ago. What's been going on is a huge shift to whereas we hoped emerging market nations would start getting their act together and growing fast and pushing the world along the way China used to be before this current dreadful prime minister who's returned it to communism and ruined the economy. But things have changed. Now, incredible. When the chairman of the World Bank, Jim Wolfenson, my friend, told me that the new nations, starting in 1985, would follow China and the world would grow twice as fast, and he was completely wrong. And the new nations have been pretty bad, meaning no rule of law, crooked, and these new nations, as is always the case when nations are run by thugocrats, thugocracy is my word, corrupt, authoritarian people whose first act is to destroy the judiciary. They end up run by people who take everything away, steal property, kill people, And it has been estimated by the World Bank that 2% of the GDP of a good 2/3 of the third world steal 2% of the nation's GDPs. They tax them and say, we're going to tax you $1 billion a year and build ports, phone exchanges, But actually, we're only going to build 18 billion worth. We'll steal 2 billion and send it to our accounts in the West Indies. All over the world, the Russians, the Chinese, the Revolutionary Guards, all these people who run countries. They're basically, in my view, thugocracies, not all of them. They take the money, and the Revolutionary Guards, there was a big interview with one on 60 Minutes. They want to steal money for their grandchildren as best they can. Now, they hate America. We're the great sinners of the earth. They can't think of America till they think of their grandchildren's trust funds. And where for the next 40 years do you want them to feel safe? Where should they put this extra money that not only comes from cheating like China on the trade deficit, giving it a huge trade surplus, which has to recycle into a trade deficit. But you mean, Woody, my God, on top of that, they have slush, extra money, excess global capital, as Larry calls it, that additionally to anything previously is trillions because of two facts. A, these thugs steal money from everywhere. And B, guess where 78% of it supposedly goes. Remember, they want to protect their grandchildren, etc., etc. Where do they invest once the money's out and into the Cayman Islands? It has to move. What country do these people who hate America, hate it, where do they put their money for their families? Quick answer.
US dollar.
78%. The key point not to forget is you can't buy a US dollar with which they have to buy T-bills, T-bonds, farmland, or whatever else. You have to have dollars first. So this thug money, this global slush, as Larry calls it, this is completely new and it has nothing to do with third world profits go up. Just means they have more money and they choose to buy U.S. assets. Whether that continues, I don't know. But because of this, currencies and the degree to which the whole world wants our stock market and everything else now matter to currencies a lot. And that whole crisis you've recently seen about the dollar going up and down after years of rising, but the big crisis, as you read, my God, the market went the opposite direction of bond prices. How could long-term interest rates go up when everything else was falling? And the answer was very simply, more and more people don't trust us. So they want less or cheaper T-bills and T-bonds than they used to. And so restating all this, the new threat to the dollar is not, oh, our interest rates are 6 and there's a 4. We don't even look anymore. We don't care. We're worried whether or not the U.S. society and culture is going downhill, and people no longer look at us as the great innovator and the safety spot of the earth. So they no longer think we're the only place to put your money. And we have advantages. We're a safe country, and we do have an awful lot of foreign money. So for foreign people, foreigners like putting money in the dollars, well, at least their dollars they can buy. Other markets don't have enough currencies to do what they do to the U.S., just buy their currencies. They just don't have enough. So let me stop for a second just to point that much out, that the dollar, one of the big problems in the world is we are about to face a collapse of the dollar for these reasons. Nothing to do with interest rates or unemployment this time. But this time, it all has to do with what happens when you have a huge trade deficit every year. The whole world must finance you by buying dollars with which to keep their money safe in T-bonds. So let me stop for disagreements, questions, whatever. This is not an easy topic.
And when Donald Trump got into power the first time in 2016, in January, your dollar was at 103.5. And then 2 years later, in February 2018, it was at 88.50. That was the bottom. So it dropped 14.5%. This time around for Trump 2.0, in January of this year, the dollar was at 110, and as of now, it's at 96.50, so down a little over 12%. So you haven't got to that full range yet of down 14.5. Maybe it could even dip lower, because this time around it's very different. You don't like hearing that or saying that, but with the whole attacking of these tariffs and creating a trade war, are you seeing this as a good idea now, and beneficial to keeping the U.S. dollar as the global currency and world reserve currency? Or
these are now becoming overlapping different questions. Let's go
Yes.
one at a time. Your first question was which? Before the tariff concern.
Yeah, so I think the tariff concerns are having a lot to do with driving down the dollar, and the concerns aren't over yet because they're only partially into these negotiations and discussions. Is it going to continue on the same trend?
That's something I know a little bit about because I happen to have been the teacher of and friend for 35 years of our new Secretary of Treasury, whose name is Scott Bassett, who's smart, and he is the good one involved. The answer is yes. This is the whole point I've been making. Now, when the currency goes off and we are irresponsible, it is the dollar that has gone down. But the minute Scott Bassett said we're not going to use tariffs the usual way, we're going to use it merely as a threat, and said it won't be remotely what people were thinking, the markets reversed and, as you know, went way up. So the problem with our quote tariff story is you're calling it negative. The IMF said that the amount of world trade that will be tariffed, which happened when all world trade was tariffed in 1930 in the Smoot-Hawley Act for 5 years. When we blocked the world and they reciprocated, trade dropped 82% for the earth. The trade tariff was very damaging. Did you hear me?
Mm-hmm.
Well, this time, 82% of those terrible trade deficits have been annulled or canceled by Scott or by meetings with the Prime Minister of America or the President comes out, meets some new ambassadors in Europe and punches one in the face, something we've never seen before. So get in that line over there. Come see me a week from Tuesday and we'll do a deal. All the prime ministers are doing deals. And Trump plays the game, threatening them, loosening the day before. Look at all the tariffs with China. None of them ever happened. So he's a very strange kind of leader. But all you can do is hope there's a trend of the kind my friend likes, to the extent that he's there. Scott can be fired. And Musk tried to do it, but then Musk is fired. But it's just my hope is we will end up 75 or 80% of the tariffs being implemented. Okay? Which means that our economy will end up upsetting the markets, maybe somewhat, but much less than people have thought. And to move my words fast 2 weeks, the markets are now saying that they can't take seriously as tariffs because they change all the time. So it's very ambiguous, but the trend he's learning that really serious trade deficits will cause inflation and hurt world growth. And it'll all come to a head before the next election, 1.5 years. And I think he will find ways to hurt countries and to get the results he thinks he wants without full-scale trade deficits. I may be wrong, but if this is true, the impact of global trade deficits will be a fraction of what they were in 1930 from the Smoot-Hawley Act. Reason number 2 that all of this is so serious, yet won't hurt the American economy the way it used to and would have in the past have done. The reason why the trade deficit, let's say of equal size, will do half the damage by my estimate, which is very flaky, is because the nature of the economy has changed. When our trade deficit consists of cut down on diesel motors sent to Beijing and they cut back on cars, these are big items that really hurt a company, cause it to fire 250,000 people. When Buick has excess demand and they slow down on firing people, U.S. Steel sees it and they go fire people, and bang, 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 the close correlation because of these companies meant that they moved in sync, and that is what caused famous inventory recessions. So the fact that we're now a service economy, that we all make pizzas and our clients are not Beijing because the pizza gets too damn cold on the plane, so it's 2 blocks away. Pizzas are great. They don't get tariffed. And that's true with lawyers and CIA people. Now, I'm not saying we don't have a lot of service jobs. We do. But it's a very different story in how they can cut our manufacturing and cause 400,000 people to be fired. See what I'm saying? So becoming a service economy that now employs 80% of our workforce. This is the huge change I've written about for many decades. So let me stop. I'm just trying to give you some reasons why the markets do get very worried when it looks like he's going to be serious about tariffs. But go look at the economy and the markets today compared to 5 days after he was president, when the whole thing, global collapse. They don't take him seriously. They don't believe he'll get away with all the tariffs, and they could be completely wrong. But the trend seems to be that the actual amount of tariffs is lower than people had expected. Okay?
Trump threatens secondary Russia tariffs of 100% if no deal, meaning no deal to sort out this war.
He's using it all the time for everything to get his way. But people, if you haven't noticed, are reacting with the terror you might expect, because he keeps betraying everything, taking the tariff off Tuesday, back on Friday. You'll agree, it's crazy, correct?
Mm-hmm.
So all I'm saying is, my hope is this will spare us at least 50% of the agony we suffered from a true global trade war, which we had.
Mm-hmm. Okay. And
But
then
it's still shocking.
Mm-hmm. And then there's another item here about Powell, who supposedly is involved with a $2.5 billion renovation overrun for 2 Fed buildings. And that's going to be cause to push him out and have Trump replace him, maybe with your friend Bissent. But could something like this happen?
You bet it can happen. The president is quite keen to get him out of there, and dissent would be fine. But it's not that so much as it is firing the head of the Fed. We do not do that. That's the point that would matter.
Mhm.
And this is very scary when the courts and the Congress can't stand up to Trump and let him do all this. I'm not sure he's legally is allowed to carry out all these firings.
Mhm.
It's unclear. But why does the judiciary have to be as unclear and unfair as the rest of the government? I just don't understand it. You think it would put an end to that now? We have separation of power. You cannot go in and close another department because you don't like it. And why this is allowed or why he acts as if it's allowed. And when the judges say no, he says, well, maybe. And he just goes on his way. We've never had anything like this.
Mhm.
And the foundation of the West, the foundation of modern democratic philosophy is one and the same. It is that we have done well, our economies that are quote capitalist with the rule of law have outperformed by several dozen times the growth over 5,000 years in living standards, which everywhere barely went up till Adam Smith were in England and other countries. The living standards and life expectancy didn't begin to improve. They exploded beyond belief. People live longer and better. We should remember this.
Mhm.
It's a very good thing we have going for us. And if the people around the world can't look and see who's done well, who hasn't, I don't know what's wrong with them. When young people say in polls, oh, 60% of us favor communism, have they ever realized what happens with communism where you don't even have the rule of law? So the point I'm making here is that, as Edmund Burke told Adam Smith, the rule of law is the foundation of all of Western thought. There will not be any of your capitalism, Adam, if you think that there's no rule of law, because capitalism means building a new business, throwing 100,000 each in creating something, and then making a bigger building and have growth, growth, growth. But if some of the people being asked for money saying we're not going to do it because we can't trust it, and if you can't bribe the judge, over, and only have all you want. But if the judicial system, which is everything, is in trouble, watch out. That is what I don't like at Trump. I don't mind if he's a horror. I don't mind if he does this or that, and I may find it very unpleasant, unattractive. But when I hear him dissing the Constitution, my view is he should be imprisoned. No delay. That is it. He's sworn to defend the Constitution only on purpose by the founding fathers, and he thinks he can ignore them. I tell you, I would literally have him taken down to the third floor and just locked up. He does not deserve impeachment. He's betrayed a trust so deep, it's largely responsible that the world has gone on.
Can you give some examples of where he's really ticked you off and should be hauled away?
Oh, yes. I've just given the main one. As I said, most of what I may hate a policy, I may hate this and that. But when he starts saying we can ignore the judges and we can ignore the rule of law, it's not that it takes me off. I think it's so dangerous he should be removed. Or I'm a nobody. I mean, who am I? That's just Woody Brock's view.
Mm-hmm.
But I happen to believe it's a very important view because I've studied the background of Western philosophy and the rule of law, as Descartes first pointed out, really is everything.
Yeah, I guess the one question is like, why do some people in the media take the perspective that China has racked up these record trade surpluses, like with quote Trump's help? Like, is that the media being cheeky, or is that actually true?
Now, I don't understand who helping China?
Well, I think it's help in quotes, which is to say, I think some, investment newsletter writers are sort of poking fun at the fact that he's indirectly uh, causing those surpluses to happen. Maybe
So
any.
how has the trade deficit with China, which has been getting worse for 25 years, what are we doing blaming Trump for those
Well,
surpluses?
well, that's the thing. Perhaps they're just making a mockery of it, or the newsletters that I've seen, and there haven't been many, are just sort of a parody versus reality.
I have found them quite biased to the extent that I've seen them. And I don't even think it's important. China had a turning point, maybe it was 2011, when it had to radically change and rely on exports. It became the great export. Certainly Americans dying to buy cheap China things did contribute to our buying their goods and the trade deficit we had with them. That is true. Businessmen did that, not the government. Businessmen all wanted to build their Chevy with parts that were least expensive, so they'd buy the stuff elsewhere.
Right.
China couldn't grow the way it wanted, relying on consumer investment and consumer spending, as that still is incapable to do. When the people who do not trust the thugs save 34% of their money versus 5 of ours. So the government, just like is given up trying to make them have babies, can't get them to spend. Well, let's make the cars for everybody in the world and have a huge another trade thing. I believe in free trade in the full sense, but the full sense meant that the free trade you believe in has a lot of restrictions about what's allowed and what's not. You are not allowed to have a big trade deficit because your Chinese car was so cheap because the government paid workers half their wage, meaning their private sector wages were so low. We all bought Chinese cars, but we don't subsidize workers, and they get an artificial, totally illegitimate trade surplus, correct? And they did that for years, and many American manufacturers loved it. The more they could buy for their stuff, cheaper prices, whatever. Currencies must consist of 2 different things. A, they have to have the property, as you mentioned, of transaction ability. You have to be able to take your euros and mine and buy a chocolate bar with them, correct?
Mm-hmm.
They have to be useful as transactions. I can ship 70 million euros to you for a Van Gogh, correct? And maybe no one will hear about it. The other thing a currency must have, which it doesn't, is stable value. If I save up all my life euros and do better than the dollar for my retirement, now I have 8 million for my retirement, whereas I would have had 5 had I put everything into just dollars. Already 4 times. Just before I retire, euro drops 35%. And now I can't eat enough hamburger when I retire because the value of my euros relative to the dollar, which is what I use to pay for food so far, has dropped way down. I would have been better to just leave it. So this is a very complicated topic. You're talking about the euro doing better. You'll notice how few times you hear that word defined. You'll also worry a lot about anyone who says it's stable compared to the dollar. It is a speculative tool, little understood to me by many of the people who specialize in it. They've developed their own jargon, their own everything. And Einstein warned us that when you hear people using jargon, they're using it because they don't know what they talk about. I think you have to be careful. This is yet another thing with which, like Dutch housing values, you can play with it, you can use it, and it's very easy to talk others into being great believers. And then the crash comes, and the houses are worth nothing. I say this, and just to warn you, for years have been looking for good logical explanations of why I need a euro. And other than from being able to speculate in it, I do not hear many good reasons. So I don't trust it. I find it confusing, and rarely are my questions answered meaningfully. I may have completely missed the boat here, that the dollar itself won't be the reserve currency. We need something else. Certainly possible, but it's the same error that the world has been making for decades. Why, when we had 53% of global GDP in 1945, the most powerful nation by 3 in the history of the world with the only atomic bomb, why, with now 20% of global GDP, and China having gone from 1% to 38% of GDP. Why isn't China a reserve currency the same as us? China is rich and powerful if there were no communists and great government. But it has a bunch of torturing thugs running it, and it's not doing well. It has 1.98% of world reserves. In other words, no one takes it seriously. That is because the people that manage a nation's reserves are middle-class bankers wanting to be sure to put their money safely. And these middle-class, cautious people want to put their money safely. They don't like the Chinese currency. You all see what I'm saying?
Mhm.
The dollar likewise. You could easily now argue ought to drop 30%. It's this and that. Believe me, it'll be around. May get weaker. We already are a third as big as we were. But that's because, I hate to say it, those middle-class people around the world know we have the rule of law. And outside of England and Ireland and a few European countries, the ice gets very thin. And bureaucrats like the rule of law.
The one thing you've touched on, and you always usually touch on, is obviously the indebtedness of nations, including your own and ours above the border. What do you think countries can do to avoid a potential insolvency, we'll call it?
Hold on, to avoid what?
A potential insolvency.
You mean the U.S. just doesn't stop overspending and borrowing
And just
goes broke?
continues. Yeah.
Well, as Walter Wriston famously said, nations don't go broke. They find their ways of smoking their way out. But almost always at the cost of living standards falling in half. Get it?
Mm-hmm.
Get it? It can get out, but it pays a big price. I think the U.S. will be quite clever in dragging out the time it takes for it to reform. I think my friend Bill Clinton, far the smartest politician we've had since certainly Reagan or Roosevelt, was absolutely right when he said the welfare state is itself what's the word, the very good word he used, is a contradiction in terms. The welfare state is new, and it came from when everyone left the farm and no one knows how to grow tomatoes anymore. And no one would know what to do if there were no food you could go buy. So anyway, long story short, which was the variable we're talking about?
No, you talked just about insolvency, and you talked about the U.S.
Yes, no,
dragging debt.
insolvency.
Yeah.
From doing what we're doing, you can put it off, but the world will know that. And the respect for the dollar will keep dropping as you're suggesting. But you're forgetting something very important. The number one Harvard rule I learned on currencies. We look at the dollar, we see all my pimples, we make mistakes all over the place. Awful America. Until Professor Chamberlain comes along and says, smell the other 19 barrels of apples cooking for apple pie. They're worse. And when people start looking around at how terrible the dollar is, they usually, like the world asset holders, find it's not great, but pretty good. So I think, as I said, the dollar will stay around and be around. If it's really insolvent, you just have to ask what it means. It means it can't pay its bills, correct?
Yes.
My mother gets 5% a year to live on the income from her T-bills. She's happy to buy them. She wants the 5%. Yes?
Yes.
Suppose the government defaulted on her payments once in a while. Can you even imagine the disaster? If they said this year we're not paying you? What's never happened.
Yeah.
It has in many countries. Better than that, how's this for a high IQ solution? What Japan taught us before anyone else is you can have a situation where you have a huge trade deficit like Japan, and it's getting embarrassing and expensive to service the debt, although they've had zero interest rates, so it hasn't hurt Japan to have big deficits to service them. But it's very simple. The Treasury issues the bonds. The Treasury raises money from getting them from the IBM pension fund and my mother to buy the bonds, correct? They're bought by people whom it doesn't dare default on. If you default on Mrs. Brock and the IBM pension fund, you're finished, correct? And if there's too much debt, maybe we'll have to start defaulting in the private sector. No. The Federal Reserve Act of 1911 let the Fed buy secondary open market security purchases. In English, the Fed cannot go to an auction and buy half of 2 trillion T-bills needed to finance a debt. It can go, once those are sold and out in the secondary market of a lot more, all the bonds in history, it can go right out there and the Fed can buy bonds. But by law, it need not pay an interest rate on. And it owes them to nothing. No one, it owes it to themselves. No one's being defaulted on. So one of the things you can do is to use the central bank to say, well, you have, 10 trillion, and we're going to do things and make it easier, and we're going to see to it that there's no interest expense on these, no one's defaulted on. Keep it very quiet. And turn $100 trillion notes due every 5 years into notes due every 500 years and make them perpetual securities the way the English did. And it just, they don't get any money from the taxpayer being taxed to pay for Mrs. Brock's interest. Now, that's a pretty reliable way to do this if you do it right. But I don't know much about it. I don't know enough about this. But there are many ways of dealing with the debt. What you don't want to ever do is default, and that's your word, insolvency.
Okay, Woody, that's great. You better get going there. And this has been a really insightful as always, and we'll get some good feedback from our audience from this, I'm sure. So I hope you continue to recover there and get good news from the doctor shortly.
Thank you so much. And then, send me any questions or have them call me up. Okay.